So I stand by my prediction that we're going to see a consolidation in gold in the coming weeks, maybe even month. And that gives us a chance to start to take a look at some of the gold miners that I find particularly interesting. And we're going to start today by me presenting to you one of the gold miners that I have been invested in for a while and that I find really interesting because they are super interesting catalysts coming up, great news flow, and this is a stock that is not only severely undervalued, but also underowned by institutional investors, and that gives it a big time upside. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so let's start with the gold price, because if nothing happens in gold, then that's the perfect time for us to A, do our homework and our research for the mining companies that we want to buy, and B, hopefully get a chance to buy these up on the cheap. So this is the gold price you see here right now, and basically since April, nothing has changed. We are right now exactly at the price points where we were around April 16th. So what can you say? Consolidation over time. Now, look at that brown line. That's the 100-day moving average. And take a look at the 100-day moving average when we move back all the way to 2024 when we broke out of gold. Actually, we got the first signal when we broke the 100 here. And then look at this. Test successful, test successful, test successful, test successful, test successful. As you can see, we are bouncing off the 100. That's the big support line. That's the first thing. The second thing, we have always come back to it. So every time the gold price moved far away from the 100, we came back to it. We moved far away from the 100, we came back to it. And what are we doing now? We moved far away from it, and now we're coming back to it. And as you can see, the 100-day moving average is basically sitting right here at this double support zone of the pink horizontal zone, the lower end of the sideways channel that we have been in, and the upper end of the uptrend channel. So very high probability we're going to go down at least to another $100 in gold, right? And then we will see. There's still an option that we're going to go down all the way to 3,000 or even below. I would bet we go below. We're going to test the lower end of the uptrend channel because this is just too nice for the institutional money to press gold below 3,000. You're going to have all these retail people having their stops below 3,000, and then you're just going to burn all them, gobble this up, bounce off the lower end of the uptrend channel, and laugh all the way to your bonuses at the year's end. But one step after another. Either way, this clearly shows you, history shows you, we will likely at least shed another $100 in gold before it's all said and done. We will talk about gold once we hit this level right here, right around 3,230-ish, 50-ish. We'll see if this move down here is coming, right? And one of the reasons why is, man, everybody and their mother is bearish on the dollar now, and I don't like it. As you know, when everybody's in one camp, you usually want to do the opposite in the dollar. We were bearish. When did we get bearish? I'm sure the people that watch the channel remember. I think it's about here. When we broke this uptrend, I said, hey, there's a chance that the dollar is going to go down significantly, and we rode this all the way down. One of the best calls of the year, one of the easy money calls of the year. We played it through rising gold prices. Same thing though. But now I'm really starting to get cautious on the bearish dollar short term, just because the sentiment is so anti the dollar right now. Right? When we have extreme levels like this, usually the opposite happens. And if the dollar goes up, right, that is another problem for gold. I told you this before. What I really do not like about gold, what makes me cautious about gold, look at this last down move that we had in the last week of June in the dollar, right? And really, this is the gold price, right? The gold price went down as well. We had a big move down in the dollar, we also had the Israel-Iran war, and the dollar basically, and gold basically has done nothing in June. This is as bullish as it gets for gold, and nothing has happened. That means all the news are priced in right now. And that again makes me cautious for the dollar, which is good for us because that gives us a chance to talk about some of the gold mining stocks that I find interesting. And this is a big one, not in size of company, but in complexity. So we'll stretch this over 2 episodes. It'll be necessary, you'll see it. It'll also help that I'm supposed to talk to management Tuesday or Wednesday. We'll see. So let's get to the presentation of the company, and I'll say a couple of words about presentations in general when it comes to all types of companies, but especially mining stocks. Let me just make this a little smaller so it fits the screen. Here we go. So when you look at presentations of companies, you have to remember, this is very important. This is like the Tinder profile of a company, right? This is the chocolate side. This is the best picture to have. You know, you have like 20 pictures. Look at, my hair doesn't look good. I look a little chubby here. No, light not so good. Oh, this one is good. This one, the one that you put on your WhatsApp avatar, right? That's what presentations for the companies are. Presentations that the companies put out are not, and I repeat, are not a true reflection of the company. They are what the management wants you to see of the company, right? If you go through a presentation and you don't walk away super impressed and super interested in the company, man, that company is probably shit. I'm sorry to say it. But if the presentation, which is the best that the company wants you to see, all the strength, right? If that doesn't excite you, then they really have nothing to offer or a lot of problems. On the other hand, they will try to hide and cover up the things they don't want you to see in the presentation, which actually makes presentations valuable if you know what to look for, right? So you basically can look at a presentation in terms of what does the company do, right? What does the management think could happen on the positive side, because that's what they're going to put out there. What's the investment case? And then, what are they not telling me in the presentations? Because that is probably the part of the company that you should dig into and look for, right? That's the problem part. That is the part where the management says, no, don't look over here, look over here, right? Nothing to see here, nothing to see here, come over here. So, let's talk about Equinox. We're already late. Man, okay, I'll try to go through this and start this off quickly. Now, full disclosure, I've been invested in Equinox and in Calibra Mining, which merged with Equinox for a long time. I do not, because the merger is completed now, I sold my Calibra shares before the merger was completed because I had both and I didn't need a double position. I do own my Equinox gold shares. I have had them for 5 years or 6 years or something like that. And I'm not getting compensated in any shape or form by Equinox Gold for this presentation. This is a company that I find interesting. So you still have to do your own homework, but let's get into it. So this Equinox that we're talking about right now, also often referred to as the new Equinox, comes from a merger of 2 companies, as I told you, Equinox Gold and Calibra Mining. Calibra Mining had a couple of mines in Nicaragua, and then through a really, really clever takeover, got into the possession of the Valentine mine in Canada, which was the new story and the super story of Calibra Mining, which always traded at a big discount because it had mines in Nicaragua. Equinox Gold basically tried to become a junior producer and then a senior producer by acquiring a lot of mines that were producing gold already, or companies that have producing mines. And the problem is, in order to do that at an affordable price, you usually have to buy mines that have some flaws. That's the story. But the concept, the idea was, well, if we grow really, really fast, then the market's going to forgive, for example, higher all-in sustaining costs of the gold production of some of the smaller mines, or we can later sell off some of the smaller mines because we bought bigger mines. And this concept worked in the gold bull market, but when we had the correction in gold in 2023, that didn't work so well. And Equinox Gold is sitting on a ton of debt. Now, they're combining the two companies, and the Calibra shareholders are not happy, which is important to know. They would have preferred to stay independent, though there probably would have been a takeover target anyway. The Equinox shareholders are delighted, and I think I would have preferred, if I was only a Calibra shareholder, I would have preferred for Calibra to stay independent, to be honest with you. But since I was sitting in both boats, and I'm holding my Equinox Gold shares because I really like actually what is happening here. And parts of it has to do with the news flow. So as you can see, we now have a company that has 7 producing mines in Canada and in Latin America. Now, look at the reserves and the resources. Very strong. 23 million ounces of reserves, both categories. Another 22 million ounces of resources, both categories. What is especially great is that they have a lot of projects in Canada and in the US. I told you when I reported to you from the gold conference in Zurich that I went to in April, that the thing you need to know about institutional investors and gold mining stocks is they appreciate and are willing to pay up for companies that have projects, big projects in North America, and for companies that are growing their gold production and cash flow positive, which Equinox Gold at this moment does not possess. And then how do they use the cash, right? I told you we'll see a lot of the senior miners starting to increase their dividend payments and share buyback programs and things like that. But the first 2 points, this is what the new Equinox Gold will offer. And that makes it really interesting. Now, I can see that they will try to sell off some of the smaller projects in Latin America or in the US. But really what they have is they have 2 top projects in Canada, Greenstone and Valentine. Greenstone comes from the Equinox side, Valentine comes from the Calibra side. They have a really good and interesting project in the US, Castle Mountain, the phase 2 project, phase 2 of this. And then they have the absolute jackpot joker. They're sitting on a blockbuster, potentially blockbuster mine, Los Filos in Mexico, that they are developing. And this one, if this hits production, there's a completely new valuation coming for Equinox Gold. And we'll talk about all that coming up. So, man, time is running. Okay, you can go through this yourself. It's not that important. It basically shows you, let me move this to the other, oops. There we go. Sorry about that, tech genius at work. So, as you can see, by several different measurements, Equinox is severely undervalued compared to other junior gold producers and even some senior producers, obviously, but they don't really compare. It's more the junior producers. Why is this? Well, one of the reasons is the debt load of Equinox, and on the other hand, Calibra having the Nicaragua production. The Valentine mine, which is a very, very attractive project that Calibra is bringing into the company now, is scheduled to do first pour in this third quarter that just started. So that's excellent. And that's a mine, once it's in full production, supposed to bring out 180,000 ounces per year of new gold. That's the company doesn't have yet, right? That's fantastic. Now let's talk about Greenstone. This is the other reason why Equinox has been so undervalued. Now the Greenstone mine in Canada, the other big mine in Canada, started commercial production in November 2024. Fantastic, right? Hold on, not so fast, my friend. The output of the Greenstone mine has been lower than expected, and because of that, the production costs, the all-in sustaining costs, have been higher than anticipated. It happened around 700 to 800 US dollars an ounce, and the market was really disappointed by that. Okay, that's not great. However, and here is the first part of this story that becomes really interesting for us. We all know this, and this is in the stock price now. This is what makes it interesting, right? This is not new, right? And the management in a new interview that I watched said, hey, it's probably going to be kind of the same for the second quarter. Okay, also fine for us. So that we will reiterate this situation, and then it's in the price. So that means if they are then capable, as they say in Q4 in 2026, to increase the output to the numbers that they were aiming for, therefore also additionally lowering the production costs, then we got two positive factors on our side that are not in the share price at all. And I really like this setup. Let me show you the chart real quick, and then we're going to call it a day and talk about the rest of the company, because it's really interesting developments for Equinox Gold in the next video. Okay, so here's the chart of Equinox in 2025, and you see right away, compared to the other gold miners, this is a joke, the performance. It's a massive lagger, a huge underperformance to the mining stocks and to gold, right? And again, the reasons are the fundamental problems that we had at the old Equinox Gold with the Greenstone mine, the merger, which was not well perceived by the Calibre shareholders who sold their shares of the new Equinox because they don't want them. Okay, that's okay, they're out of the market. And again, good for us because that gives us a chance to buy up. And again, the questions of, okay, so how, now we see the mining portfolio, that's attractive, right? North America, two big projects in Canada, a really interesting project in the US, nice. That's all right, but what's up with the debt? So we'll talk about all that, and especially the Los Filos blockbuster joker that's not in this share price at all, and that's really the main catalyst of all of this, right? But let's look at the share price development in a little longer time frame, and this is since 2018, since the stock went public. So as you can see, here we go. Okay, so as you can see, good things first, right? Long-term downtrend broken, nice. We are moving up in a new big uptrend channel, which we now have hit 4 times recently at the top end, and now we're breaking down. The blue line is the blue horizontal zone is the big zone, because that's the pivot zone, right? If we're above, we're going higher, and now we broke back below it, which I like. Why do I like this? Well, I'm a shareholder, I don't like it, but it's also okay, because if I want to, which I haven't decided yet, maybe I will buy more shares, because I do like the recent developments that we have heard from the Los Filos project. And again, that could be a big time game changer that is not in the price at all. So the story for us really is, are we going back down to the lower end of the uptrend channel, which will be around the $5 mark, all right? That would be a very, very interesting entry point, because that basically means Equinox is unched in 2025, even though we have a monster rally of the gold price going up around 25% in the first half of 2025. And that will give obviously a big time catch-up potential for the Equinox share. That is what we are looking at from the charts. The chart looks fine. The real action will happen once we break the blue resistance zone, right? And now we need to add a zone right here as well, obviously, but it doesn't go back as far. So one step after another, ideally we see a retest of the lower end of the uptrend channel. That's our buying opportunity, right? We have a horizontal support zone right here, as you can see. Put this in here right real quick. There we go, right? Make this yellow, orange. So support zone, that's our buying zone between $5 to $4.90. And that would work out well with the correction of the gold price, obviously, right? And that would be a good buying opportunity if you're not invested in Equinox, and that is a stock that's interesting to you. And I will again, talk about the factors that do make this stock interesting. There are some very positive factors for this company through the merger. One of them is the size of the company, which is now significantly bigger than it had been when it was a standalone, Caliber standalone, Equinox Gold standalone, which therefore makes it more attractive for institutional investors. And again, the project. We will talk about all of this in the next video. If you find this video helpful, if you find this information helpful, hit the subscribe button. In the comments, if you like this type of company analysis, deeper company analysis, focusing on smaller stocks, especially in the mining sector that are not talked about so often, put it in the comments so I know this is something that interests you, because I'll gladly do it. I'll do this all the time, right? So I gladly share my research with you, and I'll be absolutely transparent about the share positions I own and everything. Then we'll keep doing it, because right now it looks like the consolidation gold is coming. Well, I mean, it's already here, but it's continuing. And that gives us the time to talk about these companies right now in the summer. So we are prepared when the fall comes, right? We know where to buy when the prices hit the chart setups. That's it for today. Have a great start to the new week. Talk to you later. Bye-bye.